Yes, love your work. Hi guys, it's Michelle Knight from Little Miss Bookkeeping, and today I'll be talking about the 2020 federal budget that recently got released and break down what it means specifically for small business owners in Australia. So if you're interested in finding out more, please keep watching. Unless you've been hiding under a rock, information has been circulating around the 2020 federal budget following its release by our Treasurer on Tuesday the 6th of October. What I'll be doing is explaining the budget measures and focus on the initiatives more specific to small business. This won't be a video about my opinion on the budget and if I think it's good or bad or who missed out. I'll be discussing what this means for small business owners so they can make more informed business decisions for the future with the impact of the 2020 budget in mind. Before I dive in, let's quickly go through what the federal budget is. It's essentially a document that sets out how our government's estimated revenue and spending for the year. Normally it gets released in May of each year, however due to COVID we only got this budget finalised this October. As a small business owner, it's important to know what's in the budget as some of the incentives or tax changes can significantly impact your business. Next question, what's in the 2021 budget? Instead of reinventing the wheel, I'm using this infographic created by Chartered Accountants Australia and New Zealand. I'll use this to break down each of the budget measures, more specifically, accelerated personal tax cuts, extended instant asset write-off, incorporated small business loss carrybacks, super, so employers to effectively stop offering a default fund, and JobMaker. As expected, this budget will put Australia into a massive deficit, $213 billion deficit to be exact. In an effort to kickstart the economy, we as a nation are going into a hell of a lot of debt whilst we battle a slowing COVID-affected environment. I make note of this deficit as unfortunately the money has to come from somewhere. No, the government does not grow money on trees. No doubt we'll be paying this back via our tax system, but will this be over a number of years or generations? Only time will tell. Just to note, the budget is quite an extensive document. I'll insert a second infographic by CA outlining some additional budget measures, but the majority of these I won't touch in detail as they aren't necessarily small business specific. Whilst I could go through each of the numbers, a lot of you really won't understand them if I just throw up some digits on the screen. So I'll explain what practically the tax cuts mean. With changes to individual income tax brackets, employees are going to get more net pay in their hand, generally speaking. For business owners paying wages, your payroll software like Xero, My QuickBooks, etc. will be able to account for these changes once the ATO have updated their pay-as-you-go withholding schedules, which at the time of this filming has not yet been done. Stay tuned on how our payroll software providers will deal with these changes, but it's important to note that it is coming. Now, I saw this very helpful post by Glenn James and his team at My Millennial Money. PS, love your work, and wanted to expand on this and give my 2 cents as a tax accountant. Now, this is not one of those cashback schemes we have seen in the past where the government shells out money via the Centrelink system. It's more money in the hand through the payroll system for employees. Now, this is an employee example, not a self-employed sole trader example. For business owners, if employees ask you questions about the budget tax cuts and how it applies to them, they typically get the benefit in two ways, pending their individual situation. Less tax withheld on wages, hence more money in the employee's hand, aka their net pay, for payrolls from the budget date onwards, and benefit to be applied for wages between the 1st of July 2020 to budget night, so around 3 months, prior to when they lodge their 2021 tax return. If you are a business owner that processes your own payroll and see an employee's net wage go up but their gross wage remain unchanged, this is the effect of the tax cuts. More on this to come. The extended instant asset write-off is a hot topic amongst accountants. The reality is, every time the instant asset write-off gets increased, or decreased. We get a flood of phone calls from clients asking if they can purchase the new Dodge Ram, Toyota Land Cruiser they've been eyeing off, or a piece of manufacturing equipment that will improve productivity by tenfold. And generally the answer is, it depends. The government has increased the instant asset write-off to encourage businesses to spend money. It's up to you as a business owner to make informed decisions as to if the new asset purchase is going to be the right one. As a small business owner, I suggest you ask yourself these key questions. Am I in a financial position to purchase a new asset? Unless you've got the cash and it makes financial sense, don't go spending money you don't have. Have you done your cash flow forecast for when things get really tough? What asset are you purchasing? Does it even fall in line with the eligible assets definition? Assets is a general term, and eligible assets in line with the tax legislation can sometimes mean different things. For example, historically, capital works purchases like installing a new floor or getting a new air conditioning system did not come under instant asset write-off rules in the past, but rather depreciated at a set rate. Before making any significant asset purchases, speak with your tax professional first to avoid unnecessary heartbreak. Remember, a $100,000 asset purchase does not mean a $100,000 refund, and your accountant will not claim a tax deduction for that new ski boat just because it has your business logo on it. I won't go into detail about this, but I wanted to make a point that if you are a small business trading as a company and have tax losses in the 2020 to 2022 year, you may be eligible to carry back tax losses from the 2019 income year onwards. Long story short, if you have any specific questions around this, do speak with your tax agent. They will be able to guide you through this particular incentive. Changes to superannuation means that employers will not have to pay superannuation into a default fund. Employers will be able to obtain information about an employee's existing super fund from the ATO. Some other changes include the review of underperformance of super funds, which I won't go into detail about. The issue as business owners is that with super funds is sometimes employees are slack to get the superannuation information to us. It is particularly prevalent for industries with a high turnover of staff, for example, hospitality. In my role as an accountant, I help clients set up the payroll for a new staff member. In some circumstances, it might take weeks or months to get the right super information for said staff member, and before long they stop working for that employer and potentially may not be contactable. Historically, as an alternative, the business owner pays the employee's super into a default super fund. Unfortunately, what happens is that the employee ends up with a number of super funds spread all over the place. More often than not, these get eaten up by fees and typically are underperforming. This initiative will mean that business owners are able to retrieve any missing super info and pay it to the right account. A win for the business owner and a win for the employee. The government has introduced measures, aka JobMaker, to get businesses to hire young job seekers. From the 7th of July, eligible employees will be able to claim $200 per week for each additional eligible employee hired between the ages of 16 to 29 years, or $100 per week for each additional eligible employee hired between the ages of 30 to 35 years. Similar to my instant asset write-off example, it's important as a business owner to ask yourself these key questions. Am I in a financial position to hire a new employee? Can I comfortably support my current wage obligations along with additional staff? Have you done your cash flow forecast when things get tough? Can I continue to support a new long-term employee? The decision to hire new employees should not be taken lightly. It's important to hire right the first time and abide by all fair work rules. Don't hire for the sake of getting the JobKeeper a JobMaker credit, only to dump them after the money stops flowing from the government. The JobMaker credit is capped at $10,400 for each new position created, so it's not a bottomless bucket of money, and it does have an end date depending on when that position was created. I hope this video was helpful and provides some valuable insight into the 2020 Australian federal budget, specifically to all those small business owners out there. As always, if you have any specific questions about your tax situation, please do speak with your trusted tax professional. Everyone's situations are completely different, so it's really important to get the right advice tailored to you. If you have liked this video, please give it a thumbs up and subscribe to my YouTube channel. It does help me provide more valuable content to you. Thanks for watching, and I'll see you on the next video.